And ladies and gentlemen, welcome to this very exciting segment on the 25th day of June. Well, it's a beautiful day out here in Brisbane, 10 degrees and sunny. Well, hey, wasn't it a cold morning this morning? Yes, it was very, very cold this morning. Well, that's what I felt, but others might have some different opinion. But it was very, very cold right there. Well, right now, let's move on with today because we have two segments. One, we have this news and the weekend edition, and then later on at 10 a.m. we have a very special interview coming up with Guru Sai Saileshwar talking about the Sai Palki Festival, which is going to be happening very soon. All of that coming up. Well, right now, as we know, that there are many things that we need to talk about. One of them is recession that's coming later in the show today. But right now, let's get the top stories for the week.
Hello, Michael Tetlow with the headlines on ABC News. China's ambassador has called for a reset to the relationship with Australia in a speech repeatedly disrupted by protests. It was Xiao Zhan's first major public address since Labor won the election. After a dip in COVID infections in April, the onset of winter and new variants have brought on a surge of cases across most of the country. European Union leaders have formally accepted Ukraine as a candidate to join the 27-nation bloc, a geopolitical move hailed by Ukraine and the EU itself as a historic moment. The takeover of Crown Resorts is complete, giving the controversial gambling giant a new owner. Private equity fund Blackstone now controls Crown and its casinos in Melbourne, Sydney and Perth. Bendigo basketballer Dyson Daniels has continued his sudden rise to the top of the sport after being selected by New Orleans in the NBA draft. He'll make $6 million Australian dollars in his first year. And Brisbane coach Chris Fagan has described last night's 64-point loss to Melbourne as one of the side's worst performances in a long time. Those are the headlines. Bye for now.
So there were, ladies and gentlemen, the headline for today, the Saturday, the 25th of June, 10 degrees and sunny right here in Brisbane, where we're broadcasting from. Oh, it's a wonderful place to be at this point in time, enjoying the cold weather, but sunny. So it's wonderful. Well, right now we're talking about the possibility of maybe going in a recession. How close are we to that?
We see the chance of a recession in Australia being about 50% over the next 12 to 18 months. And that's what I think the market is telling us at the moment in terms of the big falls that we've had in shares. Australia has fallen by less than the US. Our share market is down by close to 20% or so in the US. It's obviously worse, but there are signals from that there could be trouble ahead. Central banks are likely to raise rates quite aggressively over the next 6 to 12 months, and they're probably likely to take them too far. That will put too much downward pressure on consumers, cause that demand destruction, and we think ultimately that will lead to a recession. Now, it could be a soft recession in that growth is only likely to fall by a little bit rather than the big collapse that we've had, for example, in the COVID pandemic or in the recession that we had in the early 90s. But technically, I do think that we are in for a big chance of a growth downturn.
I look across the ditch. New Zealand obviously has had a negative quarter. UK inflation numbers out this week were particularly high. China's been through COVID lockdowns. There are a lot of global factors at play. How long do you see this downturn lasting?
I think it could be another 12 to 18 months, just based on how persistent and sticky inflation is. Inflation is occurring in areas related to high commodity prices, also related to some areas that have had that supply chain issue in terms of the COVID delays, especially to goods. That is starting to slow, but I think it will take some time to get there. We need to see consumer demand slowing more significantly to get those supply chain issues worked through. And if we look at some of the indicators around those inflationary trackers around time of delivery for goods, I think it could be another year or 18 months away before we see some of these inflationary pressures really abating.
like most central banks, the RBA is obviously aggressively hiking rates, and we've seen 75 basis points in the last 2 months. Are you seeing any flow-on effect of that yet in the economy?
It's a great question, and we are at the moment. I mean, it's only been 2 months really that we've had those rate rises, so the impacts are still moderate so far, but we are seeing that consumer spending is starting to soften across some of the bank credit card data, particularly for services, and also the high inflation environment is impacting consumers as well, because consumers know that essential prices are going up and they'll be cutting back on spending. But the rate hikes are also working to slow consumer spending and confidence. Consumer confidence is at close to a record low if we don't account for the COVID period, or that beginning period where consumer confidence really got hit. Housing prices are slowing as well. They're down by about 0.7% since the first RBA rate hike. They were already slowing before the RBA started raising interest rates, but obviously the rate hike has worked as well to slow that housing demand. But that is, I suppose, also what the RBA wants to see. They want to see that their rate hikes are working to slow demand. This is the purpose of them hiking interest rates. They want to see inflation get down back towards their 2 to 3% target band, and the way to get there is to slow down demand in the economy.
Where do you see the interest rate, or the official interest rate, ultimately settling? Obviously, Phil Lowe has indicated 2.5%. What's your view?
I'm probably agreeing with Phil that it will be somewhere around 2.5 to 3%. The market pricing is much more aggressive. The market pricing at one stage saw the cash rate close to 4% in Australia. I think a 4% cash rate would cause a deep recession here because of the impact and the flow through to households, especially households who have taken on a mortgage in the last few years, who have fixed their rate at a rate that's probably half what it is at the moment. So we need to see how the data plays out over the next few months. The RBA, they've said this before, they're not on a preset path to get rates to a specific target level. They need to see how the economy responds. I think what we're seeing is that the economy is responding to higher interest rates, and if it responds faster than the RBA expect, maybe rates don't need to get to 2.5%. But I think a rate of between 2.5 to 3% for the cash rate would be enough to slow down inflation in those consumer demand areas and to get it back to a 2 to 3% target. But in getting there, we will have some economic pain. We think the unemployment rate will increase in 2023, and we actually see the RBA cutting the cash rate again in the second half of next year as inflation slows and you start to see that weakening growth story, and there'll be room for the RBA to cut, hopefully, if inflation does slow.
Diana Messina, always good to hear your insights.
Thank you so much.
And it's always wonderful to get that insight because, this is something which is very close to heart with so many people, looking at the inflation, looking at the interest rate, and looking at what has been forecast. And as she mentioned that, if inflation is not under control, that if RBA might even have to cut back, moving down, not straight away, but further down the track, that it might even have to cut the interest rate. So these are the signs of times. Well, right now, let's go to a colorful celebration of art and music and dance and knitting. And as we know that art and culture has been one segment that really suffered during the pandemic.
Colour, chaos and creative forces are colliding on stage as one of Australia's leading contemporary dance companies premieres its latest work.
We wanted to create an offering that was really counter to that experience that people have gone through over the last 2 years. So this is a gift. It's a beacon of hope.
Dance North's Wayfinder features music by Grammy-nominated Melbourne band Hiatus Coyote. And the textile designs of celebrated Japanese-Australian artist Hiromi Tango.
It's a really nice kind of knitting of all of these different mediums and different experiences into the one show, so I think it's really special.
The costumes were crafted from recycled fabrics And more than 100 Townsville volunteers came together to knit the set and props.
Countless balls of wool have been used in the making of this show. I think our production manager worked it out, it's about 65 kilometres.
100 of these small speakers will be scattered around the theatre, allowing light and music to pulsate through the crowd. This performance is all about celebrating togetherness and being connected after the pandemic. The production is a centrepiece at this year's North Australian Festival of Arts in Townsville, as the city strives to cement itself as the country's regional cultural capital.
So it's really important for us as a Townsville-based company that we share our work with local audiences before we tour it around Australia or indeed around the world as the world starts to open up.
Wayfinder will...
And it is wonderful to see the world opening up to arts, culture and music. Isn't that wonderful? Yes, that is just so wonderful. What is not so wonderful is the surge of flu-like infections of COVID.
From Perth to Melbourne, Australia's hospital system is at breaking point. And experts say the winter surge in COVID and influenza is only going to add to the pressure.
Our hospitals right across the country are chock-a-block full, so we're extremely vulnerable to another wave.
That wave could be only weeks away. New COVID variants are proving to be more infectious and potentially more dangerous, and authorities fear the community has become complacent.
It's a bit like frogs being boiled slowly because we're getting used to and desensitised to the number of people in hospital and who are dying.
Since April, COVID cases have been falling across the country as the worst of the Omicron outbreak faded, but that dip hasn't lasted. In recent weeks, cases have started to rise across the country. Looking at the surveillance data out of New South Wales, it's the newest variants of Omicron BA4 and BA5 that represent about a third of these new cases. Experts say they expect these new variants to be the dominant strains in the next few weeks, fueling the surge in new infections.
And the concern with BA5 is that we might actually see more people who are particularly unwell. It's been described by virologists as a sticky variant.
62-year-old Jackie Driver has caught COVID twice in 12 weeks. Living with rheumatoid arthritis, she had to take antiviral medication both times.
I'm on some very strong medication to control the arthritis, and what it does is destroy your immune system.
Now on the mend, she's conscious of catching the flu.
I'm definitely going to be wearing a mask this time.
There's already been a sharp surge in lab-verified influenza cases. Part of this is because we've never tested for influenza like this before. In some instances, COVID PCR tests are also picking up the flu. But nevertheless, this is a particularly bad season.
It is a bad season, and right now, as we have looked at those cases, it is because the number of tests that have been done and also the PCR tests that are done for COVID also picks up those flu and influenza there as well. So it might have been in the community before, but never been tested to the great levels and the heights that it's being done right now. So that could be one of the reasons, but nevertheless, the numbers are increasing, and that graph, if you look at that, it's a very, very steep incline there as well. Well, right now, as promised before, that today we will be looking in depth at the Queensland budget, which has been handed down. Let's take a look at what it really means.
A hike to coal royalties will help fund a major spend for Queensland hospitals. It's the key focus of the 2022-23 state budget. There will be 3 new hospitals built, one in Toowoomba, Coomera on the Gold Coast and in Bundaberg. It's part of a $9.8 billion health plan. 11 more will be upgraded across the state. To maximise the mining bonanza, coal royalties will be moved to a tiered system, so when prices are high, government coffers will receive more. Payroll tax on companies with wage bills over $10 million will pay more, but those small and medium businesses earning less will pay less. In handing down his third budget, Treasurer Cameron Dick revealed the state will deliver a surplus at the end of this month before the books go back into the red. State political reporter Rachel Rieger has the details.
It's the lucrative export propping up the state's coffers.
We are back in black.
Queensland's budget will sign off the financial year with a $1.9 billion surplus, driven by record coal and oil prices and a booming housing market.
That has allowed this budget to build on our extraordinary economic recovery and standing.
The budget will then fall into deficit over the next 2 years before posting a predicted $137 million surplus in 2024-25. Net debt is expected to double over the next 4 years to $39.2 billion.
I believe we're delivering the best budget that we've actually delivered for the people of this state.
Due to soaring coal prices, mining companies will be hit with higher royalty rates after a 10-year freeze. Currently, they're charged 15% for coal worth $150 per tonne. As of July, there'll now be 3 tiers ranging from 20 to 40%.
At a time of very high profits, at very high prices, Queenslanders deserve a share of that to go back precisely into the jobs, services and services that they need.
There will also be a mental health levy which will generate $1.64 billion over 5 years, funded by big business. Companies with a national payroll of more than $10 million will be taxed, while smaller businesses will get relief. As previously announced, the gambling tax for betting companies will rise from 15 to 20%.
The Treasurer promised 26 times not to increase or introduce any new taxes. Today, he has broken that promise.
The people of our state knew what I was saying when I said it. We were very clear. We were very upfront.
Health is the budget's centrepiece, with $23.6 billion in total allocated next financial year. About $9.8 billion has been earmarked over the next 6 years to build 3 new hospitals, expand 11 current hospitals and deliver 2,200 additional beds. The Premier says it will ease hospital pressures.
This is the biggest investment that Queenslanders have ever seen, and will be delivered over the next 6 years.
The spend on health has received a lukewarm welcome.
We needed that spending to be had yesterday. Over the next year, what we're seeing is just an increase really to cope with inflation, which is not enough to make up for the neglect that the state system has been in.
So that is very pleasing. But in the meantime, our paramedics, patient transport officers and EMDs are going to struggle because it's going to take years for that kind of thing to have an impact.
The Queensland Council of Social Services says there's little in the budget to address the rental crisis and cost of living pressures.
I don't know how you can say that you can build a record number of new hospitals but you can't build social housing.
Little relief for those doing it tough.
Well, State political reporter Rachel Rieger joins us live now from State Parliament. Now, Rachel, the mining industry is propping up the state's books. So how does it feel about this tax?
Lex, the industry says it's outraged with this tax. It has labelled it as a tax grab. It says it currently pays the highest royalty rates in the country, and this will see it pay the highest in the world. So the Queensland Resources Council says this will force companies to reassess their future investments in the state.
And Queensland has shown that it's not reliable as an investing destination. That is going to cost jobs well into the future, and those jobs will be predominantly in regional areas.
So this tax will generate an additional $1.2 billion over the next 4 years for the state, but the Treasurer says he isn't sorry. He says coal companies have been making record amounts, and when they do, it's only fair that that money is reinvested back into Queensland hospitals, schools and the regions. Lex?
All right, thanks, Rachel Rieger at State Parliament. Well, let's go to the architect behind the big spending budget, Treasurer Cameron Dick. Now, Treasurer, you keep on saying you haven't broken your promise on no new taxes, but surely that's exactly what you have done.
No, I was asked about business and my response was very clear, no new taxes. And this is the proof. This is a media release issued by the Queensland Resources Council on the Thursday before the election. Companies knew the promise didn't apply to them. The promise was made to the people, which is why they campaigned after I made the promise all the way through the election.
Treasurer, with all due respect, though,
and now delivering for Queenslanders.
Well, with all due respect, October 2020, the quote's here. OK, make it clear there's no new, under Labor, no new taxes, full stop. So haven't you gone back on your word?
No, absolutely not. The election was about the people, our promise was to the people, and that's what we've delivered. And these revenue measures will now improve regional hospitals, improve regional racing, and very importantly, support mental health care for some of our most vulnerable Queenslanders. And I'm really proud to be able to deliver that for our state.
Treasurer, looking at health and the AMA, we've heard from them, they're just saying you're just playing catch up, basically giving the over 5% increases, just keeping up with inflation.
No, our budget increased for healthcare 13% over 2 years. We put on thousands of additional doctors, nurses and allied health professionals, and we've delivered 1,300 beds since we have been elected, with about another 900
No, but we're talking about this budget though.
So that's what
we're talking about this budget. They're saying it's just keeping up with inflation. Like, will it, fix the ramping problem? And how will you find the 10,000 staff that you want to hire?
Well, the AMA called for 1,500 beds, and we're delivering 2,200 across the length and breadth of Queensland. And we're delivering more than 250 over the next 2 years alone. So altogether, 2,500 additional beds in the budget, and when we get those beds built, that will free up capacity in our hospital system, and that will help Queenslanders wherever they live across the length and breadth of Queensland.
All right, Minister, I guess you can't please everyone. Thank you for your time.
Thanks very much, Lexi.
Well, ladies and gentlemen, there you go, the Queensland budget, and sorry for that little bit of slight delay there, but yes, that is looking at what's going to be happening, and that's looking at the budget in depth. Well, right now, it's time to go to our daily events and take a look at what sort of events are taking place right here in Brisbane. Well, ladies and gentlemen, that's about all we have for you on this Saturday, the 25th of June. It's now gone up 2 degrees since we began, so it's 12 degrees and sunny here in Brisbane. Don't forget that we have a very special program coming up today at 10 when we're talking about Sai Baba Palki Yatra, and we'll have Guru Sai Saileshwar and of course Marina Chand right here in the studios talking to us about that. Until then, it's goodbye from us.